Good evening. This is the video newsletter for Buy Sell Short for Tuesday, August 2nd, day number 8 of the sell off. We are down 900 points now. Big 260 point drop today. The reason, we got a few reasons out there. I guess the predominant one was, again, weakness in Europe. The last couple of days have seen the bank crooks go after Italy now. The stock market in Italy down big over the last couple of days. That has sort of overtaken the U.S. issues now that we've been able to finally increase the debt ceiling. So here we were a week ago at 12 to our 751. This manufactured crisis that never should have been a crisis has now taken $1 trillion in market cap pretty much out of the stock market over the last week. We've had our worst move in the market, 8 down days. Last time we had that was October 2008. And on the back of that, the economic data has essentially sucked. So we've got a crappy economy and Washington cutting debt, no jobs, and Congress about to go off on a 5-week vacation. So pretty much more of the same. But at least when these idiots are out of D.C., there's probably not a whole lot of harm they could do. They've pretty much done what they can do at this stage. As for the market, we saw a big time acceleration into the close of selling. We do have the FOMC meeting next week, and given the slew of really crappy economic data, what I'm thinking is going to be the excuse for them to start to bounce the market really, really soon. There's going to be chatter about QE3, whether or not it's the same kind of program like buying bonds in the market or more the same thing that the Fed's been doing over the last month of pumping more money into the M2 money supply. You can be assured that the Fed is going to get back in this market in a big way. We broke down below the 200-day moving average today, and that triggered a lot of robot selling going into that last hour of the day. Hopefully, and we've been hoping for this quite a few times over the last month, that we will have a gap down in the morning, a nice little gap down. If we got a gap down, down to the 11,700 under area, it would make for a good pickup of stocks that are down decently. So we're going to be looking to see if we can pick up some bargains on any possible drop early on the open tomorrow morning from margin calls, etc. People just coming home tonight and going, what the hell just happened? Didn't we pass a debt deal? What's going on here? If we look at a 1-year chart on the Dow, you can see that breakdown below our uptrend support line and the 200-day moving average. The last time we were below this area was back again in August of last year when we had a pretty decent sell-off of about, well, we ended up dropping about 1,000 points back then too. And then we bottomed when the Fed came in and said, hey, they're going to do QE2. So that's probably what we're looking at to save this market. Some positive comments from the Fed over the next few days. Things have gotten really, really bearish out there. We've been sitting on high cash over the last couple of weeks. Tell me it does not feel fantastic to be high cash right now. We sit back. We pick our spots. There's no need to gamble. We've got our gamble calls in the options, Goldman Sachs, SMH, some of you playing the spiders, etc. That's enough of a tiny little exposure that if we do get a big upside move, we've got a piece of it. Otherwise, we're going to sit back and wait for buying opportunities. If we look at the SMH chart, you can see the same thing, continued breakdown right at support that we saw back in November of last year. Below this, we're looking at 30 as the next support level. Again, we're getting really oversold. We've got the Fed meeting next week, but, we could see continued weakness over the next couple of days. Now, I did mention, the economic data has really sucked over the last couple of days. You can see here on the Dow 15-minute chart. What I would be looking for right now as a possible long trigger would be a move above today and yesterday's highs at 12,150. I'm thinking we're probably going to see 12,300 over the next few days. We're really due for a big bounce. I mean, we have essentially dropped almost 1,000 points without any sort of reasonable rally here. So we are getting overdue one. Things are getting very, very bearish out there. But we're not going to press our luck yet and start picking up some plays. We're going to miss the first part of this bounce back. just to err on the side of caution. Again, we're down 8 days in a row. Mirror of 2008. October of 2008 was a crazy time if you weren't a trader back then. We had some huge up and down moves. We probably want to see some more up moves here before we really get committed. As for the economic data, we had the retail sales report come out today, disappointing again. But if you actually read into the details, it's not as bad as the headlines are making out. Yes, it's the first drop in consumer spending over the last 20 months, but a big component of that was sales. Prices came down, gas prices came down, so that came down. And then the other big component was car sales were weak. But they're actually saying the reason for car sales were being weak was lack of inventory over the last month or so on auto floors. Just because of the Japan slowdown, we're just now starting to see those supplies come in, and that sort of impacted it. But there's no ifs, ands, or buts. The data has been very, very weak. GDP growth, terrible. The Fed is likely going to jump in and do something, and that's what we're going to be waiting for. And what I'm thinking is going to be our excuse for a bounce rally over the next possible few days will be what comments the Fed say. Remember, they started talking about QE3 at the July meeting, the last meeting. So they're already mulling that before the recent batch of poor economic data come out. So, they're not going to let us dip back into a double dip recession, especially with the stupidity we have in DC right now. It's essentially on the backs of the Fed again. And, the crazy move we've seen in gold prices is pretty much telling us we're going to see more of the same. And also, we had this manufactured crisis over the last month regarding the debt ceiling, and we still have, some ifs out there. And the reason for that is they created a crisis out of nothing, and now we're worried about the rating agencies downgrading the U.S. debt. Fitch came out today and said AAA rating for the U.S. is going to stay a AAA rating. We still have Standard & Poor's idiots out there who could possibly throw a spanner in the works, but I don't think they will. But that's what, they're using as an overhang on the market right now. So a lot of fear out there right now, but we're high cash. Let them burn the market down. We can swoop in and pick things up at our own pleasure. We're sleeping like babies at night. High cash, stress-free. When the turn comes, you can bet traders will jump on this bandwagon really, really fast. So for now, it's just a matter of sitting on our hands, waiting for the right time to pounce. And that's essentially going to be it. The pop scan right now, we've got a few plays on it. I'm not going to send out a pop scan tonight just because all our focus tomorrow morning is going to be on looking at crazy dips. And like the example I gave in the chat room, what we'd be looking for would be, say, NEI close at $1.34 today. If we saw NEI drop to 121, 122 on the open tomorrow morning, that's what I would consider a big dip buy, and would look to swoop in on a play like that to pick some up for the inevitable bounce back. So that's what we're going to be looking at. That's going to be our focus for tomorrow. And then we can, build our strategy from there. But as for now, high cash, sit in your hands. For a lot of you guys, the best thing is just to sit back until you start to see me sending out email trade alerts. Then you'll know it's time to start dipping your toes back in the market. And we're still maintaining any plays we do, half position stance is still the way we're going. If we jump into these intraday scalps, half position. If you're normally buying 5,000 shares, until we change our stance, you go to 2,000 shares or 2,500 shares, half what you normally do. Right now, this is a market where the best trade is no trade. We're protecting our portfolio so that we can trade another day. There will be another day. We've been through a lot of these crappy markets. They always end, and then manias come and fat gains. So patience, guys. Things are really, really dark right now. But as the saying goes, always darkest before the dawn. Hopefully, we'll have the Fed come out here in the next few days and, give the shorts a whooping. That's it for the video. Any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Good night.